Good morning. It's Thursday, the 12th of December, and this is Govindraj Ethiraj, headquartered and broadcasting as well as streaming from Mumbai, India's financial capital. The take. The incoming governor of the Reserve Bank of India, Sanjay Malhotra, unwittingly showed his age, just being a day, whilst addressing the media at the Reserve Bank headquarters in Mumbai on Wednesday. So firstly, he was careful not to say anything that could be construed as a forward-looking policy statement that could obviously rock the markets in coming days. He was even more wise not to do a Q&A session with the gathered media who were, as I would be, itching to ask some pointed questions, including presumably whether he would cut interest rates and maybe even when. Interestingly, he spoke of policy stability and stability in general several times. And while that applies to the Reserve Bank in general, it would actually apply in specific to his previous job in the Ministry of Finance, where he was Revenue Secretary. Which is why, for someone who heard of his move to the Reserve Bank of India governorship at best a few days before the world did, he was perhaps reflecting more on stability in the context of economic policy than monetary policy. Of course, all of this is in a manner of speaking. Now, if anything, Reserve Bank of India's monetary policy has been too stable, with interest rates locked now for 11 consecutive monetary policies, while most major central banks in the world have cut rates in recent months and quite sharply at that, and there are more to come. India need not follow the same global path, but this time around expectations were high because economic growth had slowed sharply to 5.4% in the previous quarter against the Reserve Bank of India's projection of 7%. Remember, the rumor mills have been buzzing with the somewhat unlikely suggestion that one reason outgoing Governor Shaktikanta Das did not get an extension after a 6-year term was because he did not lower interest rates. Now, to return to stability of policy. In all my conversations with tax experts and businesses alike, the biggest grouse has been the lack of stability on policies. Now, tax is a classic example, and let's take the most recent case. Last week, it emerged that the government is looking at raising goods and services tax on a wide variety of products, including ready-made garments, to between 18 and 28%. The Clothing Manufacturers Association of India erupted in protest, saying that not only would such a move benefit those who don't pay tax or encourage others not to, but lead to some 100,000 jobs being lost because of the jump in prices. Now, that might be a trifle dramatic, but there is no denying that the tax slab suggestion came out of the blue for the industry. In August 2023, the government said it was going to license imports of laptops and tablets. Following a severe backlash, it flipped and flopped and backpedaled several steps and finally said a couple of months later that it would not impose those restrictions. Companies like Apple and HP must have breathed sighs of relief because they could continue to import laptops, which obviously were at that point not being made or potentially could not have been made in India, at least in such short notice. But that sport continues to hang over the industry though, and could fall again since the government would like these laptops to be very much made in India. When it comes to taxes, both direct and indirect, the list of grievances is so long that it will require a year-long special series of columns just to address them. Suffice to say that on taxes and overall policy, India has not been able to deliver stability that investors, whether domestic or international, desire. In a public appearance just ahead of his appointment, the incoming governor, then as Revenue Secretary, told tax officials to keep economic growth in mind and avoid saddling businesses with overly large tax demands. People in the industry call them high-pitched demands. He told officers at the Directorate of Revenue Intelligence, according to media reports, that revenue comes in only when there is some income. Therefore, we have to be very cautious so that we do not, as they say, kill the golden goose. The Union Budget 2025 is expected to see, among other things, an attempt at reducing the sheer onerousness of the current Income Tax Act, for which work is on and suggestions have been taken for several months now. While the Reserve Bank of India's new governor, Sanjay Malhotra, is a self-professed technology buff, the Ministry of Finance also has a somewhat sudden hole, which will not be easy to fill, as Business Standard editorial director Ashok K. Bhattacharya argued on the core report yesterday. Right now, the government needs more stability of economic policy, and the Reserve Bank of India needs perhaps less stability of monetary policy, at least in the context of interest rates. And that brings us to the top stories and themes for the day. FIIs are back as markets gear up for a Santa rally. The rupee hits a fresh low on reports of China loosening its yuan. India's chief economic advisor makes an indirect case for bitcoins and crypto a day after the conservative Reserve Bank of India governor departs. The Asian Development Bank lowers India's growth estimates.
This is a core report with Govindraj Ethiraj.
Is a Santa rally coming? The markets were still somewhat flat for the second consecutive day on Wednesday as they awaited fresh cues. Foreign institutional investors are back in the market after all their earlier bouts of profit booking. The BSE Sensex and NSE Nifty 50 closed in the green, but only slightly so, with the 30 stock Sensex closing up 16 points at 81,526, while the NSE Nifty 50 was up 31 points at 24,641. So amongst the broader markets, we saw some new highs. The Nifty Mid-Cap 100 and the Nifty Small-Cap 100 were both up 0.27 and 0.38% respectively. Foreign institutional investors are obviously now back to bigger deals in December. Against the $2.5 billion sell-off seen in November, they've already bought Indian stocks worth about $3 billion in the first 10 days of December, leading to the Nifty already rising 2% this month, according to the Economic Times. The Nifty is now only 6% away from its record peak touched in September end, while the Nifty Small Cap and the Nifty Micro Cap 250 have already touched new highs. And that suggests that the market is to be, or rather willing to be, in a mood to take greater risks. Morgan Stanley, which we spoke of, or who we spoke of a couple of days ago, is suggesting an upside potential of about 14% in the next 1 year and has given a base target of 93,000 for the Sensex. Morgan Stanley's analyst said that with strong earnings, macro stability, and domestic flows, it's hard to argue against India's investment case. And that said, potential global growth risks, including a bunching of IPOs and near-term growth concerns, present challenges, they said. Elsewhere on Wall Street, Alphabet's shares rose 6% on Tuesday, the day after the company hailed its latest quantum chip as a breakthrough. The Google parent company on Monday revealed Willow, a quantum computing chip the company said performed significantly better on a quantum computing benchmark than its predecessor did in 2019, according to CNBC. An indirect case for crypto. India's chief economic advisor, quite interestingly, a day after the departure of the more conservative Reserve Bank of India Governor Shaktikanta Das from his position, made an indirect case for crypto, bitcoins, and online gaming. According to him, in India, where there is extensive financial illiteracy, he said that regulators need to distinguish between not standing in the way of moonshots and in which sectors we need to be more conscious of social cost and benefits, whether it's crypto, bitcoins, and online gaming, he said while speaking at a government function on policy reported by website Money Control. According to him, we should be sure of the criteria we want to set for the regulator to not stand in the way of innovations, and the same principle of transparency and social cost benefits that we want to apply to regulated entities and some of their financial innovations should also apply to the regulators themselves. The regulators are expected to live by the same principles of transparency that regulated entities are expected to live by, which means information sharing by regulators, and they must be conscious of the limits of their unelected powers, he said. The Finance Ministry has been wary of bitcoins and has highlighted in the past the challenges of working with a currency without an underlying asset, something the Reserve Bank of India has also echoed. And in case you've missed this, the largest token, Bitcoin, recently broke the 100,000 ceiling because in the United States, incoming Donald Trump is clearly a supporter of Bitcoin, and the entire industry has been rallying behind him as well. Some countries have embraced cryptocurrencies. El Salvador saw its reserve cross the 600 million mark. And according to reports, Vancouver City in Canada is thinking about using cryptocurrencies for payments and taxes, actually, according to a report in Mint. The rupee slides with the yuan. The Indian rupee weakened to another record low on Wednesday thanks to a fall in the Chinese yuan and heightened dollar bids in the non-deliverable forwards market, or the NDF market. The rupee hit a low of 84 rupees 86 paise against the US dollar before closing at 84 rupees 83 paise, up marginally on the day, according to Reuters. So the rupee has weakened about 0.4% in December, now underperforming many of its regional peers on concerns over slowing growth, said Reuters. The appointment of the new Reserve Bank of India chief Sanjay Malhotra has fueled expectations of rate cuts next year, hurting the rupee some more. Earlier, China's yuan slid the most in a week on a Reuters report that Beijing is considering allowing the currency to weaken next year. The offshore yuan dropped about 0.5% to 7.29 per dollar before recovering somewhat. The move also triggered drops in regional currencies, with China proxies like the Australian and New Zealand dollars also sliding somewhat, according to Bloomberg. Now, pressure on the yuan has intensified since the re-election of Trump, who has threatened tariffs on China and other countries. Investors are speculating, and we've mentioned this in the core report as well, that Beijing could abandon its current policy of maintaining a stable currency and allow it to weaken to compensate for any tariff impact. The yuan touched a one-year low versus the dollar earlier this month, and this quote that follows sums up the uncertainty best and why threats of the United States tariffs is already having knock-on effects all around the world. A strategist at Mizuho Bank in Hong Kong told Bloomberg that it was inevitable due to Donald Trump's tariff threats. We believe a sharp yuan drop wouldn't be allowed due to capital outflow risks and fragile confidence on China growth, but this was something markets were preparing, he said. The ADB lowers India's growth rate. The Asian Development Bank on Wednesday lowered India's economic growth forecast to 6.5% for the current financial year from its earlier estimate of 7% because of lower than expected growth in private investment and housing demand, according to a report in Business Standard. The bank also lowered India's growth forecast for 25-26. It said that changes in US trade, fiscal, and immigration policies could dent growth and add to inflation in developing Asia and the Pacific, according to its latest edition of the Asian Development Outlook. It also said that Asia and Pacific economies are projected to grow 4.9% in 2024, slightly below ADB's September forecast of 5%. It also said that India's growth will remain robust with the economy supported by higher agricultural output resulting from the summer, which is the Kharif crop season, which will also put downward pressure on food prices, continued resilience of the services sector, and lower than expected Brent crude prices in 24 and 25. Speaking of Brent crude, it's currently quoting around $73 to a barrel. ADB also said that strong forward-looking and labor market indicators, urban labor force participation, and Reserve Bank of India's industrial outlook suggest that economic momentum will recover in the coming quarters. Gauging the market mood. And now a quick view on the markets. Foreign institutional investors, like we said, are returning to the markets in December, which is a slightly unusual time for them to do so. But if that is the case, then what are the other macro and micro signals, at least as seen by the analyst community? I reached out to Avinash Gorakshakar, head of research of Profitmart Securities in Mumbai, and I began by asking him if he was seeing a change in mood too and where that could take us.
You're right, Govind, that FII flows have started coming back in small numbers. And although the trend is not consistent, I think one good part is that the big panic which was seen earlier is now more or less completely out. More importantly, I think markets are looking at possibly a faster kind of incremental inflow of FII money only after Donald Trump takes over, in US as the US president from 20th of January. So I think, once Mr. Trump takes over, I think you could see a lot of flows coming back to India. Whatever money has been going to China probably, is unlikely to go now because clearly Mr. Trump has made his intentions very clear. And I think Q3 numbers, according to me, are going to be much better compared to Q2. So I think, even on the corporate earnings side, FIs are sensing that sectors like metals or for that reason, real estate, automotives, consumer durables, all domestic facing themes are doing pretty well. In fact, even on the IT side, we have been getting a lot of reports that there are several green shoots which are expected once the US market starts announcing big order wins once the new president comes in. Mood in the market has now become slightly moderated on the positive side, although, there is a little volatility in the market and you must accept the fact that post 15th of December, usually FIs go out for holidays. So you're going to see volumes shrinking quite significantly. So now whatever movement comes in the market would be coming in the month of January. And I think that is the time when possibly we could see a sort of a small Santa rally because markets would also start discounting the oncoming budget. Although we don't know what can come in the budget, but I think broadly the market is looking forward. Q3 numbers will be better, flows will come in. And I think the markets have also reflected that in the index level. We are almost about 24,500 for a long time. And in today's markets also, we saw the broader market doing in fact much better than the frontline indices. So I think a lot of money is also coming in the broader market, specifically the mid caps, small caps, where I think, FIs are selectively making some buy.
How are you seeing domestic flows? We saw some reduction in bulk investments in mutual funds in the last month. But anyway, that could be a one-off. But how are you seeing flows overall?
No, I think, mutual fund SIPs have been doing pretty well. In fact, my sense is that Govind, with interest rates still down, most importantly, I think equity as an asset class has caught on very well with the retail investor. Today also we saw buying of almost 2,000 odd crores when FIs were sellers. So I think, this kind of money is now a sustainable kind of flow. So I would not be surprised that for the coming financial year also, domestic mutual fund money is going to play a significant role. Clearly now, the alpha generation this year is going to be a much more challenging task. Whatever kind of money the markets have made in the last 1 to 2 years, going forward, investors would also have to be ready for moderate returns of say 15-20%. And I think if they can achieve even these returns, then I think it should be a great achievement. Broadly, return expectations have to be moderated because obviously valuations are not cheap. You have to take that into account. In spite of heavy flows, you're not going to see a runaway rally.
Right. And just to come back to the sectors that you were referring to, Avinash, you talked about metals, you talked about automotive, and even consumer durables. All these have been under fair amount of pressure, and at least the numbers. And Godrej just the other day said that they were expecting a weak Q3 as well, even if they did not say it in as many words, but they did talk about pressures. So, are you confident that Q3 will see a recovery? I mean, or rather, the recovery will be so quick?
Yeah, I think you got to look at it from a sector point. I think FMCG, according to me, has been badly hit. If you talk about agrochemicals, you talk about consumer durables, you talk about real estate, you talk about building products, these are sectors where there's a lot of growth. In fact, construction, EPC companies are doing very well. Order books are overflowing. But I think, yes, in terms of automotive, the passenger car segment has taken a beating. The commercial vehicle segment has taken a beating. So maybe, companies like Tata Motors, Ashok Leyland, or for that reason, Maruti, Hyundai, these could possibly show a muted or maybe underperforming in Q3. So I think it's going to be a pick and choose, Govind. Maybe not all sectors gather momentum. But my sense is that typically the fourth quarter for the automotive sector is supposed to be a bumper quarter. So I think we are keeping our fingers crossed. Hopefully, the two-wheeler market has been doing very well. Almost all the two-wheeler companies are doing pretty robust volume numbers. We may not see a very robust performance across all sectors, but yes, selectively sectors which have got a strong tailwind and where the order book is good, I think these should do reasonably well. So I think at least compared to the quarter two, quarter three will be slightly a tad better.
Is there any sector, or I guess sector is the ideal theme here, that looks like could be new or sort of a sunrise kind of sector for you for 2025?
Sunrise sector, Govind, is a difficult call.
Or something new, I mean, or something that we've not spotted or perhaps was beaten down too much.
I think Govind, we have been very positive on the agrochemical sector. If you see the performance of the sector last year, most of the stocks were beaten down because there was a lot of inventory pile up in the system. Prices had come down suddenly and quite significantly. But this time, the market has picked up significantly. So my sense is, the agrochemical sector looks interesting. Large players like UPL have been beaten down, but numbers on the ground seem to be suggesting that there's a turnaround happening. We can look at numbers like, from companies like Rallis or Sharda Cropchem or Sumitomo. So I think all these companies are buzzing with excitement over new product launches and better margins, better volumes. So I think agrochemicals could be a slightly contra bet. And I think looking at the fact that this year monsoon has been reasonably good, one could expect that this, continuously flows even for the next financial year, apart from FY25. So this is a kind of a sector which is not in flavor as of now. But I think, yes, reasonably good risk reward can come provided, the data points are better.
Right. That's a good note to end on. Thank you so much, Avinash, for joining me. Coke is in flavor. The Bhatia family, promoters of the Jubilant Bhatia Group, are set to acquire a 40% stake in Hindustan Coca-Cola Beverages, the wholly owned bottling arm of Coca-Cola India, for 12,500 crores, according to a report that first appeared in the Economic Times, which means Coca-Cola has sold 40% to the Jubilant Bhatia Group. This will also be the family's largest acquisition to date. The Bhatia family is led by Shyam and Hari Bhartia, and the transaction will be funded through a mix of equity and debt, according to reports. And the Bhartia family, led by Shyam and Hari Bhartia, is contributing 5,000 crore rupees, and the remaining is coming in from Goldman Sachs. Jubilant is a conglomerate with interests ranging from agriculture to food, including running India's franchise of Domino's Pizza since 1996 and Dunkin' Donuts more recently. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.